All right. I guess we're going to start now. Is everyone excited? They're excited, as you can tell. Okay. Sorry, I'm just going to get my questions to make sure that I don't forget them. I already lost. Can someone message me in the group so I can find the chat? Sorry, I have so many chats on Telegram. So anyways, today's going to be a very educational kind of panel, but we're going to have fun. So don't worry, it won't be boring. I can see all of you guys have a lot of excitement as well. After the panel, we'll do some questions both in English and in Thai. So if you want to ask a question in Thai, feel free. We'll have a translator up here. And cool, let's dive in. Sorry, let's do some intros first. So you want to do an intro, Top?
Sure. First of all, hello everyone. Pleasure to meet you all, and thank you so much for flying all the way here to Bangkok. I hope you guys spend a few more days down south or up north. We have very nice beach and mountains, and price to quality ratio here is great. Nice people, nice food. I'm sure you will fall in love with Thailand while you're here. My name is Top. I'm the founder and group CEO of BitCup. We are the largest digital assets and blockchain conglomerates here. I've been in this space for 10 years now, 9 years and 8 months to be exact. Right now we have 5 operating entities under our group, ranging from the largest licensed exchange to our own chain, our academy, venture fund, AI, metaverse. So we have roughly 1,000 employees now, and we pretty much conquered the Thai crypto space. Thank you.
Yeah, good afternoon, everyone. My name is Ryan. I'm the founder of Copia Corporation. We are responsible for blockchain advisory, helping bridge the gap between Web 2 and Web 3 in terms of payment solutions.
Hey, good afternoon, everybody. My name is Al. I'm a partner of Sensen Tech, based out of Singapore. We are a data analytics and payments processing company, and we're based out of Singapore again, and happy to be in Thailand to meet all of you.
Hello, I'm Daniel. I'm head of Web3 of Banking Circle. We are a European bank, a B2B bank that clear for payments companies and other banks. We clear about 12% of e-commerce flows in Europe. And I'm also the director of CoinsUtrust, a cryptocurrency exchange based in Singapore and also Canada. I'm also I'm a board of director for Damun Tech, a company based in Europe. And I also advise for Anchor Coins, which is a stablecoins issuer. And I'm also advising TechStorm TV, which is in esports. Before that, I set up the DBS Digital Exchange, which is a cryptocurrency exchange in the traditional bank.
Thanks. I'm Lee. I am the founder of Rook Digital Unlimited. It's a marketing services agency. We cater to the creative and digital marketing needs of people all over the world for projects and brands, but not just limited to Web 2. But we also help brands from the Web3 sector. Thanks.
Thank you all for that. My name is JD Salbego. You beat me. Usually I'm the most OG on the panel as they're speaking. I'm only 8+ years. He's a legend, literally. It's good. Yeah, I've been in crypto for a long time as well. My current company, Moonstacks, we provide Web3 infrastructure and tools for game studios, metaverses, any entertainment or brands leveraging Web3 for NFTs or tokens. We allow them to build, run, and actually scale mass adoption, because currently, outside of just minting an NFT like on OpenSea or minting an NFT in your game, there's 0 tools to actually scale this industry. So it's something I've been really passionate about. I've had for a while now. So anyways, let's dive in. So, we're here to talk about digital assets, innovation across money, right? The transfer of value, et cetera. So let's start with kind of a basic question. And I think maybe I'm not going to ask specific people. Let's just have fun here and keep it free flow, and everyone jump in however you want to do it. Bear in mind a little bit of our time that we do have a bunch of questions. So let's not go into too much, but if you're vibing and passionate, by all means, let's have fun, doesn't matter. So the first question, What are the problems with the current payment process and system, and how can digital assets innovate this and take us to the next stage? Anyone
Shall
go?
I start quickly? Sorry, let me take the liberty to start. The current payment system is ancient, very old. The arrival of credit cards was 1950, was after the Second World War. We're now living in the internet era, right? The first pain point we see is that most of the payment system are a closed system, meaning that we cannot achieve interoperability between different closed systems. For example, in Thailand, we cannot transfer money from a Thai bank to WeChat Pay, to Alipay, to Visa, MasterCard, Stock Exchange, Western Union. There is no full interoperability in a frictionless manner. And usually, even banks within their own consortium, they don't trust each other. They need an intermediary, right? And these intermediaries are not efficient. They charge like 5% fees to get money across to other countries. They have to wait for 2 days to process the transaction. So apart from not achieving full interoperability of payments, the current system is also very inefficient and expensive. In economics, we call there is a huge deadweight loss in the current payment system, right? And also, when we are operating in a closed system, nobody can build applications on top, right? I think the best analogy is to look at the Nokia phone versus an iPhone, right? Nokia phone is a closed system. Innovations come from the top. The CEO could think of 3 things that a phone can do, right? You can call somebody, you can send an SMS, and you can play a snake game, and that's the end of innovation for a Nokia, right? And enter the iPhone, right? Steve Jobs, that's the only his last invention ever, the iPhone. And then he opens up application store for the world to innovate. Then everybody can think that an iPhone can now order a taxi, an iPhone now can order food. Innovations come from anyone, anywhere, right? And Nokia did not change the world. An open system like an iPhone changed the world. Eventually, in every sector, we are moving away from a closed system towards an open system. We started from Encarta, from Microsoft. Eventually, we moved towards Wikipedia, right, in the long term. We start from Nokia, we move towards an iPhone. Same with the payment system, same with the point system. We are starting from a closed database, moving towards an open system. If you guys have anything else to
No,
add.
I think it's true that there's a lot of fragmentation that is actually preventing it. So all the systems that you say is in isolation, and it links by a whole network of correspondent banks, right? And that is the main problem. Because every country would have their own real-time gross settlement system and then have an internal payment system. But when you do a cross-border payments, you have to be linked by different correspondent banking network. There are a lot of utopian ideas by payment solution provider to try to solve this. For example, using stable coins to replace correspondent banking, right? But I don't think it's a technology issue. I think it's a global regulatory issue. Because, for example, if I get a stable coin, or someone give me, let's say, for example, US dollar or euros in euros and need me to transfer to US, right? I can convert it to a stable coin. I can send it over. But what happens is that when you send it over to the other side, you burn that stable coin. That person that burned that stable coin cannot do that third-party payment for me. He would say, I would need to pay you back. Then it needs to come back to me, but I'm a European bank, I'm not a US bank, for example, right? I would then need to rely on my correspondent bank to receive that. And then after I receive that, then only I do that third-party payment. So then I might as well start off with the Vostro Nostro. And that's because that's how regulation works. It's very difficult to do a third-party payment. So it's not a technology thing. The technology solutions can be done. It's just that the global regulation is not supporting it at the moment.
Just want to add quickly, apart from the regulation issue, I think we also have to factor in the sunk cost bias issue. because traditional banks, they have invested in bank branches all over the country, armored trucks to move money around. These are initial investment costs that banks need to win back the money that they initially invested. As a result, there are currently 2 billion people that are unbanked around the world because they don't meet this minimum income threshold for them to be bankable, for them to be profitable, to onboard as a bank customer, because the cost is simply too high, right? But when we, leverage on blockchain technology, mobile phone, then the cost would be much lower, and then we can bank everybody now because the average cost of onboarding customers versus the initial investment cost, is now bankable. It's now economical to do that, right? Think of it as Skype versus traditional telcos. Telcos used to invest a lot in infrastructure, landline. As a result, they have to charge like, $1, $2 for international phone calls, right, per minute. Enter TCP/IP protocol. Skype is building applications on top of an open source protocol like TCP/IP. Think of it as a blockchain of this generation, building applications on top. Skype has virtually much lower cost versus traditional telcos, so they can open up their service to a much wider population because they don't have as much cost to win back the money that they initially invested. Right? So we have to, apart from regulation issues, I think another issue with the current payment system is the sunk cost bias as well.
Yeah, I mean, I agree with what Top said, right? Coming from banking background myself, I spent 15 plus years in banking, and the reason I kind of moved into cryptocurrency and digital asset is because my first experience receiving an Ether back in 2017, and the ability for me to immediately send it out to my friend in the US within minutes at less than $1 gas fees, that is unthinkable in the banking world. So I'm kind of convert from TradFi to kind of DeFi now. And then when you think about it, right, the true internet value is really about moving data, sharing data, with anybody, anytime, anywhere in the world. So if we are already sending messages, emails with anybody in the world, why can't we send the same message, but it's something of value, Everything, the money is in digital form anyway right now. So why can't I send Top, $1 or send Daniel $1 in Singapore, anywhere, anytime in the world, right? Why is there such a huge restriction and so expensive for me to do that? Technology is never an issue, like you said. So I guess that's the reason why we want to try to create something better than the existing banking system. That's why we see the likes of Visa and MasterCard, coming into play, partnering with Solana, Ethereum, PayPal launching their own stablecoin. These are all very, I guess, interesting developments that we need to watch out for.
Yeah, true. And all the points are very interesting. And speaking based on my experience, I think the current banking industry or the current finance industry is technically inclusive, very much in theory, but in reality, and it's the way it presents its customer experience, it really is not. Because upon starting my agency, it was really very hard to get clients from all over the world because of the restriction. There was one time that I really had to, for a $30,000 payment, I had to go through various remittance centers just to get that payment. And when I was introduced to my first blockchain client 2 years ago, that's when my world started spinning. And it was very easy to accept even 100,000 payment because of the blockchain technology integration. And I think that's what separates the concept of Web 2 banking versus the Web 3 banking. It's just more inclusive in reality rather than just in theory and in technicalities.
Well, pretty good stuff, right? I was watching this, I think it was on LinkedIn, but, we talk about in Web3 the challenges we face through regulation. Top, you mentioned with digital innovation and banking systems and the brick and mortar banks, right? And the friction there because they didn't get their investment. Corporations can't change overnight, blah, blah. And they showed when Burger King, right, like McDonald's, fast food in America, first integrated credit card. You can actually go to a fast food chain and pay with credit card. I mean, now it seems like nothing, right? But back in the 80s or whenever it was a big deal. And a news program was interviewing customers outside, and many of them were freaking out. They didn't they didn't know what a credit card was, or they were scared of it, this and that. So, it's interesting with human nature, not even just from the corporate conglomerates, right? Like the banks that obviously they don't want to get disrupted for many financial reasons, but even from the general public of, looking at digital assets or crypto, oh, it's crazy, it's this, oh, maybe it's a scam or it's this, there's always a process with change, right? And major change, especially digital assets, because we're talking about money, and money literally, if you look at history of the world and current affairs, money controls the world by straight up. Every government controls society with money. Money is everything. So anyways, let's jump on to another one. On the same topic, similar, what's kind of the current state and landscape of digital assets right now? Like, can we paint a picture of where we are? What, great headways have been made, right? What big challenges, right? Things, JP Morgan, I think they just launched another token, right? They already had the first one for the international, whatever it was. Things, what's really going on, and where do we see this maybe in the next 5-10 years?
Maybe I'll kick it off this one, Al again here. So I think the current state that we're looking at around the world with digital asset payment, cryptocurrency type of payment, is that really only about 1% of the world population has been exposed to crypto asset. This is a very, very small number, even though we're all gathered here to talk about this topic, stablecoin, CBDC, unbanked as well. But it's really a little fraction that has been exposed. The point here is there is a huge opportunity out there with respect to this, whether it's stablecoin, whether it's solving the regulation issue, or whether it's solving the unbanked and getting more financial inclusion as well. I think that's what we're driving towards. But at this point in time, we're very far from that point. Just from the very fact that about 1.7 to 2 billion people are still unbanked, we're not there yet. We haven't even solved that problem using traditional finance, right? Which is why I think, in this sense, using crypto asset, using stable coins, and blockchain-related technology is the way to go about that. Whether it's your wallet, whether your exchange, whether it's through the banking services, how we integrate that is how we move forward. I think that's what we're here to discuss, about how to gather all these pieces together to get there. But we're very far away from realizing that at this point in time.
I think one of the main things that is developing, it's a realization among the two groups of people in Web3. I think in Web3, generally, you have this group that wants to operate in a regulated environment, and they are aware that they are just a small part of the global financial system. Cryptocurrencies never grew more than like 2 trillion, but your equity is more than 100 trillion in market cap. Bonds is more than 100 trillion. Gold is more than 10 trillion, right? But there has always been this group of non-conformists that want to create their own utopian ecosystem that is not linked to the global financial system, right? And I think it's a realization that you can't really do that. Governments will shut you down, things are going to be very difficult, and this realization, I think that the better, the more people realize this, the easier is for Web3 to go mainstream. And I think that is one of the key movements that we are beginning to see more and more now. Because one of the big issues is some of them will just say, oh, I'll just use stable coins. But for them to get the stable coins in the first place, they are actually using a regulated entity to get them that stable coin. They say, oh, I use credit card, but the credit card still needs to use an acquirer to clear it, and then it's an underlying bank that does it. So they are still actually connected into that system, whether they like it or not, right? So, but there is a lot of people that are trying to fight this that actually does not do justice to the reputation of the Web3 people. And I see that with more and more people realizing this, that is actually helping Web3 advance into mainstream.
Yeah, I mean, the way I see it, the current state is there are 4 dimensions on 2 extremes. One extreme is something I call evolution, where the traditional banks and financial institutions are. They are trying to delay this change as long as they can, probably lobby the regulators to restrict the growth of the digital assets. The other extreme is the revolution. This is where, like the extreme, like Daniel alluded to, You've got the utopian kind of, the holy grail of DeFi, where everything is going to be governed by smart contracts and DeFi protocols. So it's like a decentralized monetary network where I can actually send trade with anybody, anywhere, anytime I want. So that's the other extreme. And in between the two, you've got something I would call experimentation, which is where the central banks with CBDCs will come in. You've got the likes of JP Morgan and Citibank doing tokenized deposits. Right now, I think there are like over 130 banks experimenting or already trialing with CBDCs. So that's like the experimentation. And the third one is where I'm most excited about is adaptation. Bridging the Web2 and Web2 TradFi networks. We're using Web3 technologies. This is where the likes of, like I said earlier, Visa and MasterCard, PayPal launching their own stablecoin. How do we bridge the gap between what we have right now with what we want to achieve in the future? So these are the 4 dimensions that I see at play right now.
For me, your question is what is the current state of digital assets? I would say the key word here is we're almost at the mass adoption. There are a few interesting figures that concludes this prediction, right? The first trend we see is that we are moving away from unregulated exchanges towards regulated exchanges all around the world after FTX, right, last year. So we are moving towards proper regulations, towards mass adoption. The only way to achieve mass adoption is to have a proper regulation, right, in place. So for BitCup, for example, we have received a license for 5 years already. Hong Kong is opening up, Dubai is opening up, giving out licenses, proper licenses. So that is one interesting trend, moving away from unregulated exchanges towards regulated exchanges. Second, the keyword here is humanization. Eventually, very soon, common man users, customers, will be using crypto protocols, blockchain, digital assets, without knowing that he or she is using the cryptocurrencies, right? Humanization. For example, BlackRock is entering this space with its ETF applications, right? Common man investors, moms and pops would be buying into the ETFs without getting direct exposure to Bitcoin, right? This is humanization. Or if you guys have been in Thailand in the past 2 or 3 years, you would probably have heard of this news that the oldest banks in Thailand was almost going to acquire our exchange for $1.2 billion in the biggest deal in the Thai banking history, right? They are coming towards entering this, digital asset space now, right? And in fact, they're operating now as one of the licensed player in Thailand, right? So eventually, people would be using traditional apps, like bank apps, without knowing that they are using cryptocurrency to send money across, right? Think of it this way. Many of us now are using Skype without knowing that TCP IP is running on the back end, right? Only those who want to build applications on top know that, but common man users do not need to know what TCP IP protocol is. So BlackRock is humanizing Bitcoin via its ETFs. All the traditional institutions like Thai banks, DBS, JP Morgan, they're entering the space, but they will create applications on top to humanize the products. And lastly, just to tell you the insights, BitCup is one of the few players to be a member of the World Economic Forum. We attend Davos every year. And within Davos, there's this crypto forum, right? And the members are, Brian Armstrong of Coinbase, right? Brad Garlinghouse of Ripple, Jeremy of Circle, right? And BitCup. We meet once per year. And we always discuss the trends and the issues. And right now we're at the crossroads. The US guys were saying, this is since January, this year, they were saying things like, after FTX, the US would likely to take a pause wait-and-see approach. And most likely, U.S. customers would only be allowed to trade Bitcoin. Other coins could be classified as securities. And then we started to hear the news in the middle of this year about the unclear of the definition of different tokens. And the general conclusion of this forum was, in order to scale and get this cryptocurrency, digital assets to reach mass adoption, we need to work on the standardization of definition throughout all the countries, standardization on the regulations, standardization of governance and transparency, even on the technology itself, standardization of scalability. So I think, in my feeling, we're at the crossroads now, almost. Once we fix a few more buttons, right, and get all the buttons right, we'll reach mass adoption via humanization.
Yeah, I'll speak for that. That's been one of the challenges that you've been in for a long time over the years, is that so many of the governments, they just don't regulate, they don't do anything, right? And I'm not make excuses for people like SBF and bad actors, because since dawn of time there always will be bad actors and greed in humans, right? But the fact that many of the governments don't regulate, even Japan did it, right? Through the ICO area. Japan was the biggest crypto economy through the ICO era. Everyone was fundraising there. Every user, public there, and they didn't regulate. And then when the big crash happened of 18 with all the ICO kind of bad, scams and stuff, they just clamped down and basically shut the whole entire thing down, except for a couple very corporate exchanges. But they actually shut the whole ecosystem down of startups, you know what I mean? And even a lot of investors. That's why I was living there at that time. And so the U.S. is definitely one of them. They just won't make up their mind, you know what I mean? They won't properly regulate and give us people and exchange owners, et cetera, like the guidelines so we can actually thrive, And a lot of, I wouldn't call them conspiracy theories, but real is, because there's a lot of lobbying going on in politics, right? Money is a very, very powerful thing. And the governments know that, right? And the banks know that. The JP Morgans, they all know that, So, anyways. Did anyone else want to share on this, or you want to go to another question, or the next one? Next one? Okay. So this is kind of another segmentation of where we just went from, and we touched on it a little bit. But let's talk for a hot second. I'm actually doing a keynote on this later today, and I'm very passionate about this aspect of digital assets, this innovation, and that's for remittance and cross-border, and the unbanked and impoverished people who have a hard time getting banking services, right? And a lot of the people from lower economic countries who maybe go to, America or go to other places and get higher paying jobs so they can take care of their families and send money back. And the only options are using services like Western Union, where they take like 15, 20%, right? It's just horrible, you know what I mean? And this is something I've been very passionate about. And being a foreigner who's been in Asia now many, many years, I still bank in the U.S., right? Because I'm still a citizen. So me getting money out here, forget about it. Like 8-9 days, really? In 2023, my own money in a bank, it takes about 8 to 9 days to get out. It's just crazy. So anyways, how can we really fix this cross-border, and then maybe even touching into the unbanked, right? And how that helps with there too,
I think the cross-border issue is actually not just a method of technology, because the big reason you have a lot of delays is usually capital controls, right? So different nations have different capital controls as well, and you need to meet those requirements. So like you give an example from trying to remit money from Thailand, there'll be checks and stuff like that to meet capital controls requirements, right? And this happens in many countries. And those are the things that can delay stuff. So what we could actually look at, there's a lot of people looking at, it's actually wholesale CBDCs, right? So wholesale CBDCs will actually allow for central banks to actually facilitate payments across different nations, or you can use commercial banks to actually facilitate this kind of payments in a much more efficient manner. And to meet the requirements of capital controls, you could always impose some sort of escrow. Especially if you're using blockchain technology, escrows and smart contracts actually work very well in those areas. Because I could do a transfer first, but you could escrow that money until you cannot use it, and then you do the checks, and then the capital control checks get passed, and then it goes through. So those are things that can be solved, right? But the problem is capital controls are actually a very, very sensitive topic in most countries that have capital controls, right? And they are not that willing to give up any control to any parties. And that is a key that needs a lot of engagement, right? And that would be beyond just the industry. It has to be done at the G to G level, right? Before this kind of things can be smooth. So that's why you always have the non-conformist that says, okay, we'll have a separate system, a system that we can just do without, we would just ignore all these rules and stuff like that. But ignoring the rules would actually catch up with you sooner or later, and that I do not think is an ultimate solution. And I think that is a big problem in a lot of design. Many people have great ideas, but they do not actually think through the bigger picture. Because like P2P, you can do a lot of things very quickly, but it may not meet all the requirements of what different regulators, different governments want to impose. So I think it's very important for the people that have the technology to understand the bigger picture as well. I'll give you an example. I have a friend that was going for a job as compliance officer, and he was meeting a founder of a company, right? A crypto company. And so the question that this person got asked actually shows the state of issues. So that person was asked this question, says, after you get me a license, what else is there for you to do? So the concept a lot of people have is that, a license is just like a brand. It's just like a certification, and then I can go on doing things as I wanted to. But the reality is you can't. After getting a license, there's a lot of things to conform to, and anyone that operates in the environment knows the cost of compliance for that, right? And so it's not so easy to implement something in vacuum without seeing the big picture. And I do think that is something that needs to be addressed for a lot of solutions to be done, as opposed to coming up with different ideas that, I can solve this with peer-to-peer, etc.
Yeah, maybe I'll just catch on that point. So I think on the point of CBDC, Daniel is spot on. BIS surveyed Central Bank 2020. 80% of the central banks surveyed said that they were actually working on CBDC solutions, and 40% of them have already started development work into CBDC-related works. So we're definitely on the right track in solving that cross-border issue that JD was talking about through CBDC and wholesale CBDC. I think that's spot on. But then coming back to actual user, like what Top said, it's about humanization, whether it's about the consumer, whether it's about what we do at SenseNTech about merchants. It's really about humanizing that, because you don't really care and you don't really see that wholesale CBDC settlement at all. In fact, you don't want to know about it. You should not see it. Between JP Morgan, between DBS, between any bank, Siam Bank, it shouldn't even bother you. It's about humanizing that in front, and how that last mile delivery is a solution that we should also work on. So I think to solve that problem, there needs to be that wholesale angle, there needs to be consumer side and merchant side angle, where we solve the last mile delivery, where we do not hold up payment, even though reflecting payment on ledger balance is sufficient enough for people to feel that the money has already passed through cross-border, and the problem should be settled between the commercial bank and the merchant or the payment processor in between, to make sure that the funds satisfy the regulatory requirement, satisfy the cross-border requirement for capital controls. I think those should be the things that we work on the back end, but humanizing it on the front end, it's very critical as well.
I second your motion on that one. I think the key to maybe ending or finally improving the payment system in the world is through standardization. Because the only mass adoption that can happen is when people don't feel that they're using some kind of crazy tech. It's when you don't know that you are using blockchain tech, but you are using it either way. That's when you know that the mass has finally adopted, and that's the final stage or the dream for any finance, for the finance sector.
I think remittance is gonna be a word in a dictionary. It won't exist anymore because distance
I can't wait.
because distance do not matter anymore with blockchain, right? With digital payments, money would arrive instantly, globally, in a frictionless manner, regardless of which transactional protocols we use. We can use CBDCs, we can use an open transactional protocols like Bitcoin, and applications builder will be able to humanize all the protocols, and people would have the liberty to choose which protocol they want to use to transact value. Just like now, I prefer to use Signal. Somebody may prefer to use Line. Somebody may prefer to use Facebook Messenger. There are different protocols. We have the liberty to choose which protocols we want to communicate on. And with these upcoming transactional protocols, CBDCs or open system, distance would no longer be an issue because money would arrive instantly in a frictionless manner, meaning that remittance or domestic transfer would fall under the same experience, under the same category. Distance would be out of the equation.
Yeah, I mean, just want to add one thing.
I was just gonna make a joke, but go.
If you look at Telegram now, right? So it's been very crypto friendly. You can actually create your own crypto wallet in Telegram. The problem that we're trying to solve is going to be always the last mile. Is what happens if the Indonesian worker in Middle East sends money home, but in the form of USDT? The family receives the USDT in Jakarta. How is he or she going to convert that back into INR, right? So IDR, sorry. So that's always the thing that's preventing the seamless experience, because it's easy for me to send USDT to anybody else in the world right now already. It's the last mile problem that needs to be solved. So that would require some really heavy lifting from the government to push that, because let's admit it, the current system is no longer working. No matter how you want to put whatever technology on top of it, it's not going to go far. It's like trying to put a Ferrari engine on a horse. There's only so fast the horse can run, because otherwise
That's a fast horse.
it will die. The horse will die if you put a Ferrari engine on a horse. So let's admit that we have to build a different paradigm here. Yeah.
Yeah, on that whole remittance thing, we're going to have a big, I think, uphill battle, because what blockchain threatens with SWIFT is like billions of dollars a year, because a lot of that lag time, they're in the money in escrow, they're making money off it by trading it, right? Just like Amazon, just like the Cash Apps, where they store your money through time lengths of transaction and compliance, they're making money on that. So this would wipe all that revenue off the table. Anyways, we're getting close to the end, so we should probably wrap it up with some questions from the audience. I think we got about a minute or so left. Do we have any questions? You can also ask in Thai. We have a translator over here somewhere. There he is. You guys have any questions? There we go. Okay. We should maybe, he's coming with the mic, he's running.
Hi, Roberto Kaufman. We spoke a lot about the issues and the current impediments. And so who do we think will remove those impediments? Will it be the governments? Or will it be the kind of stuff that BitCup does? Who will actually move us forward from where we are today?
I think ultimately it needs to be laws that are meaningful to this area. If you go back and look at equities in this part of the world, in ASEAN, way back in 1980s, there were no specific regulations on equities, for example, or securities. And everyone could do all kinds of stuff. And it was very similar to what it was today. And then you had a lot of major crises. 1985 in Singapore was the time when they had to shut down the exchange for 3 days. And then that's when it first came out, was the first rendition of the Security Industrial Act. Governing that, it gave them the platform to build on, and subsequently mass adoption. And I think one of the big problems, like for example, if you go to point zero where all the central bankers are actually discussing, you will hear that they have a lot of fears and concerns about things like peer-to-peer, DeFi, things that are decentralized and they don't have control of. And because of that, you will start to see that they would put more and more regulations that might not even be meaningful for the industry, and it would dampen that. So it's very important then, I think, for the industry to be realistic and engage the proper regulators to come out with platforms, with regulations, with guidelines and legal frameworks that actually work. If you force and say, I can do things to P2P, I can do transfers outside the current systems, what will happen is that you are going to get more and more resistance, and with resistance from governments and stuff like that, it's going to make mass adoption almost impossible.
Just add on a quick one. What I think will drive all these changes that we're talking about, it's really innovation, both by good actors and bad actors. You think about Luna, that's how we started about all this stablecoin regulation in this part of Asia. That's really what's driving it, right? Because people got to solve the problem. A lot of retail consumers were hurt. So innovation by both good actors and bad actors are going to drive regulation. And with those regulation changes, and as well as technology applied to that, instant settlement and all that's going to come in place. But they got to go hand in hand. It's really innovation.
That's how you make lemonade out of lemons, right? We have any? Oh, there we go. Another one.
Yes, my question is, do you guys see banks taking the lead in the world of off-ramping?
Can you? We didn't hear that. Can you say it a little louder?
My question is, do you see banks taking the lead in the world of off-ramping? Because right now it seems like off-ramping is kind of the stumbling block for a lot of businesses.
Off-ramping.
Off-ramping, right?
That's correct.
I'm getting more hard of hearing.
I mean, okay, the reality is that most off-ramping is done through payments companies. But payments companies does not exist in isolation because payments companies are not connected to RTGS of the systems of the banking, of that currencies that they are actually dealing with, and they would need a bank as a backbone, right? So if you want to go from that basis, yes, that banks will always be involved, but the main thing I think that is taking the lead would usually be, at least for now, payments companies. Banks are actually a lot more comfortable dealing directly with a payments company than with a crypto provider directly. So if a payments company is properly regulated, it's easy enough for a bank to deal with them, provide the clearing services, but then the off-ramping services that they will provide to the crypto firm is likely between the payments company and the banks. At least for now, that's how I see it.
Yeah, I think that's just, by default, payments companies have more flexibility compared to banks. And, the example I gave earlier, if the Indonesian worker were to send USDT back to home, to his family back in Jakarta, maybe he can just top up his e-wallet. And then the family can actually buy groceries with that, right? So it's almost instantaneous in that sense. Instead of the family having to go to the bank and exchange it back to IDR, right? So that would be, I think, the first thing that we can solve.
Yeah. But to be honest, in the current state at least, the off-ramping players are the exchanges, global exchanges around the world. Payment companies are not allowed to offer this service because they're under the Bank of Thailand. They are not allowed to offer this crypto service until the regulation is clear. Right? So the current service providers around the world are exchanges. But your question is, will we see the banks taking over the long term? I've been operating this space for almost 10 years. I can tell you that it's really a scale game, right? Really economy of scale. Those who have deep pockets. Because we are moving away from unregulated exchanges towards regulated exchanges. we have to have CG, good corporate governance, right? For example, at BitCup now, we have $3 billion of customers' deposits with us. If anything happens to BitCup, there is a huge systematic risk to the Thai economy. We are being classified, rubber stamped, as a CII now. CII stands for Country's Critical Information Infrastructure, right? Meaning that we're like a tollway or a financial institution, a stock exchange, right? We cannot burst, and there'll be big consequences to the Thai economy. So it's really a scale game, and there'll be enforcements like 1/3 of our board members have to be independent directors, right? We have to separate the role between the chairman and the CEO. We have to have subcommittees, like risk management committee, compliance committee, financial committee, audit committee. We have to corporatize once we reach a certain scale, right? So it's really a scale game, and banks have the advantage of having the deep pockets, and they know how to run an institution in a regulated manner already. It's a takeover game. We will see big M&A, consolidation on exchanges until we have one or two big infrastructure for each country to off-ramp and on-ramp the people. I cannot tell you if it's going to be a bank, but has to be somebody with deep pockets and know how to run things in a regulated manner.
Well, see, the difficulty for a bank as well, globally, is that
We gotta
you have
stop.
capital requirements,
Yeah.
right? So just one point, a bank, if they need to do OTC, they need to hold 1,250% capital against that crypto. So it makes it very expensive for the bank to do it.
But that is also another point that I forgot to mention. We need to have NCR, our own cash on top of the $3 billion of customers' deposits. Even though we keep customers' money one-to-one, we only allowed to keep them in a savings account. We can't even leverage on money market, right? But that's not enough. We need additional money on top. And the larger we grow, the more money we need to add on top. And I think banks have the advantage. Not banks, people with deep pockets. I don't know which institution with deep pockets would win over the long run, right? Who have the ability to top up the NCR.
Al's not going to say Sensen.
We got to wrap.
We're just service as a payments company on the front. Yeah.
I got the organizers bleeding down my neck now. Want to thank all you wonderful, talented gentlemen here for this panel. Thank you. And you want to come up?
Thank you very much. For more questions, please visit their booth in the expo. May I have a big photo session in the middle, please, gentlemen. If you need more questions to all of the CEO here on the stage, please visit their booth in the FinExpo, the room next to this conference.